Paul Hamilton. Mm. Paul Hamilton had heart surgery and is having struggles in the recovery process on that. Kim? Ann Mullins has a Ann Mullins has cancer survivor. Has follow-up tests this week. Just praying for good results there. Is she concerned it may be back, or is this a normal checkup, or do you know? She's got some issues, so more concerned that it may be back. Need to remember those that are on the mission trip up into Missouri. I know Jim and Janita and the Mormons are still up there. JT was supposed to come back yesterday, wasn't he? No? When's he coming back? He's coming. The rest of them are coming back today. So remember them. They did a door knock, and I know they got affected by the weather some up there too. So I don't think they're as bad as what we had, but the rain was coming through yesterday when I was talking with them. Anybody else? Ruby Majors broke her foot on Thursday. Anybody else? Any prayers of thanksgiving? That following through the storm, that things can be replaced, but as far as I know, we didn't have any loss of life here. Lisa, did you have one? Yeah. Several people without power, and thankful for whenever it comes back on, definitely. Yes. Brother Greg, texted with him some yesterday. I think he was projecting to come back about 4 or 5 o'clock this morning. He was scheduled to preach, but Brother Stephen said, I'll take care of it at some point. So Stephen's going to preach for us today. I know Greg's going to be worn out after traveling and getting in so late last night or this morning. Look forward to hearing the results of his mission over there in Thailand. Anybody else? If you would bow with me, we'll go to our Father in prayer. Father God, we're thankful for this day. We're thankful for the calm that we have today that we're able to enjoy. And yesterday we saw your awesome power through the storm. We're thankful that you allowed so many of us to come through unscathed by it. And Lord God, we know that some have suffered loss of property. We'll pray that you be with them as they rebuild, as they recover from those things, Father. Father God, be with any that may have been injured yesterday. Give them speedy recovery. Be with their families as they comfort and take care of them. Father God, there are many on our hearts we want to lift up to you. Hollis Burke, the Pirtle family, those that are on our mission trip, Paul Hamilton, Ann Mullins, Ruby Major. Father God, we know that you know what they need. Father God, we're thankful for Brother Greg and his willingness to go on a mission trip, and we're thankful that for the seeds that he helped plant there over the past couple of weeks, and we're thankful that he was able to come home to us safely. Father God, we are thankful for him and his family and all that they do for this congregation. Lord, we ask that you be with us as we continue our study today, Father, as we seek to have biblically based financial decisions in our lives and as we plan for the future, as we plan for our families. Father God, help us never to put our wants and our needs and our priorities above what you have us to be able to take care of your children, to be able to take care of those in need. Father God, we're thankful so much for the example of Jesus Christ and those actions, Father, that he cared for so many around him. Help us to be like him. Forgive us when we fail thee, and it's in his name we pray. Amen. If you will, open up your Bibles, and we're going to eventually get into Luke 12, so if you want to go ahead and turn over to there, that's where I'm hoping to get to today. There were a few questions, a few comments that I've gotten over this past week, some follow-up on last week's lesson from some people that took some action, and some additional questions that we either had in last week's class or that were asked of me to address specifically. So I'm going to go ahead and hit into those topics because they deal more with the retirement discussion we had, or the time during retirement that we had a couple of weeks ago. And so I kind of want to hit those points before we get back into more of an estate planning and estate discussion. So one of the questions that came up in class last week was living will versus a living trust. Okay, and my discussion is going to be more on the living trust, which is also called a life estate. But I wanted you to make sure you understood the difference between these two terms, because sometimes people throw out terms and you want to make sure you understand them. So first off, a living will. A living will is basically, and I've got it defined on the board behind me, a written statement detailing a person's desire regarding their medical treatment in circumstances in which they're no longer able to express informed consent, especially in advance directive. So basically, what I want you to do if I go into the hospital and I'm unconscious, these are the decisions I want made. And a lot of times you do this as a do not resuscitate. So you've gone into the hospital, you don't want to be put on life support, you don't want to be shocked back. When it's time for me to go, it's time for me to go. That is what a living will is. That is what your desire is, and for you to be able to express that, you have to have a living will in place. And so you can let your family know that, you can let the hospital know that through signing paperwork. You've just got to have that documented. Otherwise, the hospital doesn't know what your wishes are in that manner. So that is a living will. A living trust, which is what we've been talking about, or a life estate, is a type of trust created for the purpose of holding ownership to an individual's asset during their life and for distributing those assets after death. Primarily what we talk about during that is going to be homes. A lot of times people will put their home into a life estate or into a living trust. They have basically assigned ownership of that to their children or to specific heirs, but they have the right to use that throughout their life. And the reason why you would want to do those type things, some of the pros and the cons of it. Pros, it allows assets to be passed to heirs without going through probate. So, I mean, you don't go through the estate process, you don't go through the courts. And so that can save us some money, because typically when you go through probate, the attorneys, the accountants, the people, a lot of times they deal with those fees in a percentage of the estate. Okay, so if you have a large estate, you pay a percentage of the estate. If you do through a living trust, you basically have an upfront fee. So the difference there is, do I pay it now or do I pay those fees later? So that's one pro. You go ahead and get it taken care of. Sometimes that can be cheaper. The timing of it, you save time in the process, because that transfer of the assets already been determined, already been decided. As soon as you pass, it moves on into the children's name, and it maintains privacy. Anything you do through the courts, that's public record. Anything through a trust, that's not. That's a private information. So you can, if that's something that's important to you, you can do that through a trust. Also, living trust can be used in planning for the contingency of incapacity. So what that basically means is going into a nursing home. You're not able to take care of it. I'll be with you in just one second. You'll go into a nursing home. The living trust, that protects the house from going into Medicaid or being taken or sold related to Medicaid when and if you pass. So it kind of guarantees that your children will still inherit the house. So it's a protection avenue there. Yes, ma'am. Typically, whoever's living in the house still maintains the house. They still take care of the expenses, the tax side of it. The city doesn't care who pays your taxes. So you can pay it, the children can pay it. That comes down to more of a financial necessity there. Insurance, same thing. So whoever has a vested interest, if it's in the kid's name, they're going to keep it insured. If you are no longer living in it and in the nursing home, you may have trouble actually getting the house insured because you got to have it occupied. So but those operating expenses, either the person who's been living in it can take care of it, or the children, whoever's going to maintain the house. So the cons on these that I deal with in my profession is the tax consequences. Children don't get the same tax benefit if it's gone through the living estate as if it's gone through a probate. I'm not going to get into all those details today. I just want you to know that there is a tax consequence to your children where they will have to pay some income tax depending on what you bought it for. And if you've been living in it for 50 years, you know what you bought it for versus what it's valued at today. And so you have can have a potentially pretty good tax liability from that, or your children can. Also, setting these things up. You got to make sure that it's worthwhile to do it. It can be expensive, and the prices are coming in now. So that's the difference between a life estate and a living will. Are there any questions on that before we move along? All right, good deal. The other question I got, and Brother Tommy asked me to speak on this specifically, were reverse mortgages. Everybody heard about that? Heard of reverse mortgage? You see it advertised all the time. It's something that's been really big, been pushed the last couple of years that I've seen. And my notes. And before we go into that, I want to kind of harken back to some scripture. Flip over to Philippians 4:11. The whole advertising point on a reverse mortgage is go ahead and get money now. You don't have to pay it back. Live the way that you want to. Take care of the needs that you want to. It's a live the way you want to be. Kind of the same way credit card companies. Hey, go ahead and buy it now. Worry about the rest of it later. That's kind of what you're doing. Is you're taking out a loan little by little every month, or even in a lump sum, out of your house. You're not actually selling your house in that transaction, but you're taking out a mortgage. So flip over to Philippians 4, verse 11. Not that I am speaking of being in need, for I've learned in whatever situation I am to be content. I know how to be brought low and how I ought to abound. In any and every circumstance, I have learned the secret of facing plenty and hunger, abundance and need. I can do all things through Him who strengthens me. We studied this verse just recently, and how some people want to read that out of context. They want to stay on verse 13. I think what Americans need to realize is we don't have to have everything here. We don't have to have everything now. Now, I know in a reverse mortgage situation, late in life that there are times when there's just not enough money. I'm not going to say that these are 100% bad. I'm not going to say they're 100% good. There's a lot of things I don't like about them. But you need to know what they are before you get into them. Okay? Yes, ma'am. Mm-hmm. 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 That's one of the cons we're going to talk about. That is a major concern. So, just kind of what is a reverse mortgage? So, I want you to have all this in context with Philippians 4, being content where we are. Now, I know being content sometimes we have a financial need. We want to make sure that while we're borrowing this money is a reasonable need, is a reasonable purpose, not just I want to go on a trip, so I'm going to finance my travels by doing a reverse mortgage. Okay? So I want you to understand that, have that in the back of your mind. So reverse mortgage, it is a loan. It's a mortgage loan, just like whenever you bought your house to begin with, you had to take out a loan. It's the same thing. It's secured by your residential property. It enables the borrower to access equity built up in the property. That sounds all well and good. It's only available to those that are 62 and older. And so that's why you see on certain channels that they know the demographics are that age. You're going to see a lot of push. You're going to see a lot of advertisements for that. And typically, they don't require a monthly note payment, okay? So to give you an idea, I went online, and there's some calculators that'll do that. So assuming you're age 62, you just retired, you want to go ahead and get into a reverse mortgage. So let's assume your house is completely paid off. You got a $150,000 home. What you can get out of that through reverse mortgage is $65,000 in a lump sum. Mortgage company will give you $65,000. You have essentially handed over the right to that house to them if you when and if you die, but you got $65,000 out of it. You die the next day, they own the house. You have to buy the house back from them, okay, and pay off that loan. Secondly, you can choose to take monthly receipts. You see how little that monthly receipt is? $290 on a $150,000 house. That's the additional cash flow that they're going to give to you, $290. It's not a lot, is it? Not when you consider your house and how much mortgage and interest you've been paying on it over your life. And there's a lot of fees built into this. Up front, $7,500 or $7,750 in closing costs and mortgage fees and all the fees that if you were to do a reverse mortgage, you've got that on your bill. And if you wanted to get out of the reverse mortgage, you got to pay that off, just like that. Okay? So it's not that you got to pay that up front, it's just built into the loan to begin with. So the pros to it, and there are some, there's no monthly mortgage payment due to lenders as like in other instruments. So you borrow the money, you technically in your life don't have to pay it back. Your heirs will to an extent. There's no restrictions to using the money. So you want to go on a trip, you can go on a trip. You want to pay medical bills, you can pay medical bills. You want to give a gift to your children, you can do that. Those aren't necessarily things I would recommend, because would you go and borrow from the bank to give your children a gift? No, that doesn't make sense. Okay? Would you go and borrow from the bank to go do X? If you're not willing to do that, why would you do it in a reverse mortgage? Okay, that's the decision factor that you need to go through. Does it make sense for me to go borrow this money so I can go do X, Y, and Z? Because this is a long-term decision, a long-term commitment. This is not income. You are not selling your house at this point. Again, it's just a loan. You can get it in a single lump sum payment, like we talked about. You could get $65,000 on a $150,000 house, just like that. You can choose to do a line of credit that you can draw down on as you need it, and then you can pay this back, pay it off, but you can draw it down, or you can choose to take monthly payments over a certain number of years or over your remaining life. So all those decision factors changes what you actually get on a monthly basis. Here's the thing. You and your heirs never owe more than the property is worth. That's one plus. Who remembers back in 2008 when the real estate market crashed? What happened to a lot of people in their homes? They were upside down, right? And so a lot of people lost their homes because they couldn't afford it. We were relying on increased values, and we were just keep taking the equity out. That's not what happens in these. You and your estate will never owe more than what your house is worth. There's insurance policies on the back end that protect the reverse mortgage side or the people that sell these. So worst case scenario, you lose the house altogether. Okay? Now, no matter how long that you live in the home, no matter how many payments you get during your life or changes in real estate value, you'll never owe more than what the house is worth. Some cons, and I'm sorry if this is small for some of us. I tried to get a lot of information in here as much as I could. Some of the cons, we're spending a significant amount of equity that we've built up in the home. Think about how many years it took you to pay off that home. Well, now you're just kind of getting back into the same thing. How much interest have you paid on that home? Well, now you're paying interest again, or your heirs are paying interest again on that home. So we're giving up a big part of our equity because, again, I said $65,000 lump sum. Well, that grows with interest until your death. And so you sell the house. If the house doesn't pay off the loan, your children get nothing. If it does pay off the loan, your children get the difference. Higher closing costs than traditional loans. You have to get mortgage insurance premiums. Who here has bought a house recently and you got to put down X% so that you don't have to pay mortgage insurance premiums? Anybody? Yeah. I mean, it's throwing money away is what it feels like. Okay. Well, you are forced to have those in these. If you are on if you're on Medicaid and you take that lump sum, that's cash in your bank, and it may preclude you from being eligible for Medicaid. So there's some issues there. Bad actors. We go back to those people that are targeting individuals in trying to get these. Do you think everybody's looking out for your interest in those commercials? Whose interest are they looking out? They're looking out for their pocketbook, for their wallet. Okay, so realize that, oh, it's too good to be true. Well, sometimes it is. Okay, because these things, from my side of the table, they appear really structured to the people that are offering them. Okay, so sometimes you can get some that are worse than others. This is where it goes back to Philippians 4. Reverse mortgages, they don't provide a long-term solution. Okay, they're not a long-term solution to a financial problem. Because if you're upside down, you're living greater than your means, if you do the lump sum, eventually that money runs out. If you choose to do the lifetime, you at least have that guaranteed money coming in, but it may not take care of all your needs. It may not take care of what you need in the future. Reverse mortgage proceeds may not be enough to cover property taxes or insurance on the property, so you're really not gaining any ground, or to just maintain the home, because those are three things that you have to do. Just like Sister Dawson was talking about, you've got to pay those things. Otherwise, they can default. They can foreclose on your home. Some borrowers outlive the mortgage proceeds, like I said. If you use a line of credit and it's all used up, nothing left over when you may need it later on in life. Likely won't be able to pass the home on to your children. I've mentioned that. The loan has to be paid off at your death. So that means your children either have to pay it off, or you got to go get a traditional loan. And so now this house is fully mortgaged in order for them to get it. Okay, or they may not get any cash proceeds out of it. The availability after death. If you've got somebody living with you, if your spouse can continue living in that house until their death, but they don't get the monthly note payments if they're not on the loan. So they're living in a house that they may not be able to afford anymore. Okay, so I want you to know some of the pitfalls here. Secondly, if you've got a friend living with you or a relative that's not your spouse, once you die, it's not your house anymore. They can't live there anymore. Okay, it's now the bank's house unless they buy it back from the bank. Okay. Continuing requirements, health. You've got to live in the house. That's what Sister Dawson was talking about. That's got to be your primary residence. If you're not living there consecutively for 12 months, or able to live there consecutively for 12 months, then you are defaulting on the loan. It goes back to the bank. They foreclose on it. So you go into the nursing home for 12 months. You don't intend to when you buy this. You got to go through and you got to pay off that mortgage. The other thing, you've got to maintain property taxes and homeowners insurance, and you got to maintain it to a reasonable level. So you still have all the expenses of home ownership whenever you have a reverse mortgage. If for whatever reason you have to move out and you go live with a child, again, that immediately causes that reverse mortgage to come due. I know I threw a lot of information out there at you. In some circumstances, a reverse mortgage may work out. I think they cost too much. You may be better off just selling the house altogether and buying a smaller house. You get equity free and clear, and then you've got the money to pay on the old house. Okay, that does the same thing as that lump sum payment. May not be something that is easily feasible to do, depending on where you live and your situation. But there are other options if you're considering one of those things that may be able to be beneficial to you. Tommy, did that help you out? Any other questions on that? Yes, sir. Oh, no, no. Yeah. They're trying to give better disclosure on what's there because people, it sounds too good to be true. You know, I get paid, I get to keep living, but it depends on what your goal is. If your goal is I want my kids to have this property whenever I die, you don't want to go through a reverse mortgage side. Okay. Okay. Mm-hmm. Yeah. Yeah. So, you know, in some circumstances, it works out, you know. So in these sense there were no heirs to pick it up. So he's like, well, I'm just going to live on the equity of my house. And that can work. But you got to make sure that you understand them top to bottom and what you're agreeing to. It's not just, here's some money. Now, again, that was age 62 that I gave you $290 a month. That can take care of some bills. But it costs a lot towards the back end. Think about how much interest expense you paid on the front end when you started getting that loan. Remember how much that was, and it just made you sick to your stomach because the principal balance wasn't really going down. Well, you reverse that out, the longer you live, the more and more interest that thing earns. Okay? So it's not going to be something for every circumstance. Any other questions, comments? Okay. The last little bit of follow-up from last week, you know, I told y'all, says, hey, if you're paying too much for your utilities, paying too much, or not utilities, but paying too much for television, paying too much for cell phone, and you got all these things bundled up, call them and threaten to leave. It'll save you some money. Well, brother, do you mind if I use your name? You all are good? Okay. Brother Roberts came up to me and said, hey, that worked. I'm saving $75 a month. Okay? That may not sound like much, but that's $850 a year. That'll buy a few things, won't it? That'll make things a little bit easier. Still getting the exact same service he was getting before, but for $75 cheaper. That price is guaranteed for a year. Okay? And you know what you can do here in another year? Do it again. Okay? Whenever that price goes up, call them up, do it again. They were specifically with AT&T. If any of y'all are with AT&T, here's a phone number that you can call if you want it. I'm going to give you a chance to get your pen and get your paper. 1-800-531-5000. If you're on AT&T. That's their loyalty program, and they're going to look at your account, they're going to look at your situation, what you have, and they're going to help you through that process. If not, you can just call customer support and say, hey, what can you do for me? Otherwise, I'm leaving. You threaten to leave, most places are going to do whatever they can to keep you because your fees keep going up every year, right? But somehow those people that just come on brand new, they get a much better deal than we do. That just doesn't make sense, does it? Mm-hmm. Mm-hmm. So I know Jim's gone through something recently at his house because, and I'm not with AT&T anymore. I got away from them altogether. Jim's on AT&T, and they were upgrading some cell service towers in his area. And when they did that, he lost service on his existing phone altogether. Now, I think some of us come back during that repair time frame, but call them up. Call Public Service Commission. If they offer service in your area and you're not getting it, call them up. Say, hey, I'm not getting it. They may give you a discount if there's a certain time frame you're not getting it, or you call the Public Service Commission and complain, and then they can start opening up cases if they're advertising that they're providing service in a certain area, and they're not. Yeah, Public Service Commissioner is the one looking out for the consumer, or supposed to be. Yes, sir. Mm-hmm. 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 Yeah. So you're dealing with somebody local when you're dealing with MaxSouth. I'm on MaxSouth for my internet at home. Whenever I dropped DirecTV altogether, and in that process increased my internet speed, got on Hulu as I talked to y'all, and I still saved money by doing all that. 1-800, I think it was 531-5000. 531-5000. Okay, so do some price comparison. Do that with anything. We talked about doing that with insurance. You know, Rick, I'm sure you have people call you all the time and says, hey, can you give me a quote? And you never hear back from them. Why don't you hear back from them? You weren't the cheapest option, right? You know, you know, Rick, I love you. You're an insurance agent, but my friendship to you is not tied with my business relationship to you, okay? So, you know, as an accountant, if I don't serve my customers right, they've got other options to go to, but it doesn't mean that changes my friendship with them, okay? Sometimes business is business, personal is personal, and we got to be able to separate those two, okay? Rick, I'm not trying to take any business from you. I'm not an insurance agent, so that I've got a little bit of disclaimer, but you see the other side of it, so it goes both ways. And then you come back to Rick and say, Rick, somebody can offer me this, then Rick has to decide if he can meet that. That's just business, okay? And we all make those decisions on that, okay? Any other thoughts, any other questions on that before we move right along? All right. I think we're going to get another week out of this topic at this point. We've got about 10 minutes here. Last week, just to cover real quick, we were talking about how to prepare life for others without you. Specifically, we were talking about young families, and we talked about insurance. We used the acronym DIME, taking care of death expenses, lost income until 18, mortgage and debts, and education expenses. Were there any questions that you've had or thought about since we talked about that last week? Remember, this is always a moving number. Okay, as children graduate, you need less insurance. As you get your mortgage paid off, you need less life insurance. You know, I know that's not an applicable discussion for everybody in here, but you want to make sure that's taken care of. Let's say you got a one-income family. Say for instance, me and Leanne. For myself, I need insurance to take care of my income needs. Now, Leanne doesn't make an income. What kind of expenses would I have to be prepared to take care of if something were to happen to Leanne? How many children do I have? I have 4 children. Okay, now I can have them at the office with me for about a day. I got some grandparents there that help out, but I'm not going to get anything done at work if I've got all 4 kids. So what expense am I going to have? I've got child care. Now, who's got children and know how much child care is? No comments. It gets expensive if you're not in a preschool situation like Methodist preschool that we send our kids to. That was $150 a month. That was awesome, and they get 4 hours. They get some education. We used to have a preschool here, which was comparably priced. But you go to a business or an individual, you're going to be paying big money every week for that. So that expense would be something either I have to absorb from my own income, or I prepare for it through having some life insurance on Leanne to take care of that expense, okay? So if you've got a one-income family, it's not, well, we just need life insurance on this one. We got to think about what additional expenses are we going to have for the one that's not bringing home an income, okay? And again, this changes throughout life. All right, any questions on that? All right, now we're going to get into some new stuff. This is for both younger and older. Okay, we want to make sure our accounts that we have are prepared for the next generation. That means having beneficiary statements filled out. Okay, make sure that your retirement accounts have beneficiaries set up. Because if you don't get to control, your estate then controls it. You got some tax complications that come into play. It just muddies the water when it doesn't have to be. Okay, so if you've got an IRA, you've got a brokerage account, anything that you've got that's not tied directly to you and your spouse needs to have beneficiaries set up and co-beneficiaries set up, or contingent beneficiaries set up. Okay, so for my instance, I want to make sure that Leanne's my primary, and if heaven forbid Leanne and I were in a wreck together, it goes and my kids are taken care of. My kids are the beneficiaries of that. Okay, so I go ahead and I take care of that going down 2 levels so that my kids, somebody's going to be put in trustee position to make financial decisions for my kids, but the asset that I'm dealing with is structured for them to be able to do that. Okay? Set up primary, set up contingencies. Remember when life events happen that you adjust that. New kids, new grandkids, that you adjust that, because the last thing you really want is for little Johnny to be getting everything whenever you've had 3 more grandkids come into play and you didn't spread it out the way that you intended to. Okay? So make sure that the beneficiaries have kept up. You know, we had kids every other year for the past 8 years, and so I'm having to update those things every time. It's a pain in the butt. I understand that, but you still got to do it, right? Okay. When someone dies, making sure that you take care of their their dependents, making sure that it's all updated. Sometimes you may have a spousal situation or children, and you've got split ups between them. You want to make sure that it's going the way that you want it to go. And remember, there's potential tax consequences for not having this properly set up, and it can cost a lot of money in some circumstances. Yeah. What Dee said was that if you have a divorce situation, you want to make sure the spouse is taken off of it. Okay, so it's one of those things that anytime you have a major life event, you want to make sure all those financial matters and decisions that you've made in the past have been properly updated. Okay, establishing a will. We raised hands a couple of weeks ago. Any specific asset you want to set to specific beneficiaries. Okay? I want the house to go here. I want the land to go here. I want the car to go here. Your big assets, you want to have those taken care of so that, 1, your wishes are known, 2, so that there's limited squabbles after the fact. Ms. Beard talked about how she was splitting out the apartment complexes for Kim, and everything else was going to the other kids. She's done that. They've established that. Set the order of priorities for bequeathments if you've got specific cash. Say, I want $10,000 to go here, I want $10,000 to go here, $10,000 here, $10,000 here. What happens if you only have 15? Well, the first 10 is going to go to this person, and then to the extent available, it can go down, or you can set percentages. Yes, ma'am. Mm-hmm. Not necessarily. There's still things that you have that may not be identified to them. So it depends on how much those things matter to you on splitting out. If there are mementos or sentimental items that you want certain people to have, you either have those discussions now and everybody's aware of them, or you put those in your will. Those items, your brokerage account, your IRAs, certain things that you've identified those beneficiaries of, those fall outside your will because those beneficiaries are set first, or if they're listed on it with you as rights of survivorship. So you've got a bank account with you and one of your children's names on it because they help write your bills and whatnot. That money in that bank account goes to that child 100%, and you may not intend for it to go 100% to them. If you've got both of their names on everything, you may be very, very well taken care of. But it's still not a bad idea to have a will. It doesn't have to be anything fancy. Yeah, it doesn't have to be anything specifically fancy, but take an assessment of what you do have, and if there's anything you want someone to specifically have because that's your wish, that's the only way for you to know. Otherwise, everybody picks up, well, I don't want that, or I do want that, or we both want that, and now we're fighting over it. So a will kind of helps limit those squabbles because it's not their decision, it's your decision. Okay? And then you can have a remainder. Say in that same situation we had 5 different people we wanted to give $10,000 to. Well, we got $100,000 cash. What happens to the rest of it? Well, you want to set a remainder interest. Well, it's going to split equally between all three children, or it's going to split 50-50 between the church and then my children. Okay? It doesn't have to always be family. It can be your neighbor who's helped take care of you for 15 years. It can be for any charity. Sadly, some people do it to their cats. I don't know exactly how all that works, but I don't recommend that. Okay? But you can set that to go to whoever's beneficiary you want. You just want to make sure, and the attorney that if you use an attorney to write this up, they can help make sure some of those are in. But you want to have those discussions with some professionals with that. Okay. The other side is assume that your wishes are going to be contested. All right. Switch over to. I told you we were going to be in Luke 12. Flip over to Luke chapter 12. Back in that time, it was pretty cut and dry. You know, it was the oldest son gets 2 shares, and then everybody else gets a share. So even Jesus had to deal with this. Luke chapter 12, verse 13. Someone in the crowd said to him, "Teacher, tell my brother to divide the inheritance with me." But he said to him, "Man, who made me a judge or arbiter over to you?" And he said to them, "Take care and be on your guard against all covetousness, for one's life does not consist in the abundance of his possessions." Sometimes things get dirty after someone passes away. People squabble. People argue. And so we want to be as open as we can about these wills, about these matters, so that we limit those. Because the last thing we want is our death to cause division in the family. I've seen it happen. It hurts. It's one thing that if you can prevent it, do it. Okay? So make sure that there's clear understanding for anything like that. Assume that your wishes are going to be contested, so be specific with your kids, be specific in your will with what's going to happen. If changing a will late in life, be sure to have a senility test, meaning making sure you're right in mind, because when you're older, sometimes can be a bad actor, and that somebody may want to take advantage of you. You ever heard of somebody going and having the will changed, and now everything's left to Johnny? That's a problem. Those type of wills are contested in court. And your intentions may have been, man, Susie, I didn't like Susie one bit, and so I'm cutting her out of my will, and that's what I want. That's perfectly fine with Andy. That's your choice. But you want to make sure that you have somebody independent that comes in and make sure you're of sound mind, you're of sound judgment, that you understand what you're doing, that you're not being coerced to do something in order to make sure that those wishes are understood and accepted. That can be done by video, just to give some extra credence to it, and you want to do it with an independent party. So, you know, you don't want to go to the family attorney. You may want to go to a third-party attorney, somebody that doesn't know you. So use an attorney if you're changing something late in life. All right, so remember, the will takes care of the things that matter to you after death. Your kids will still have to go through the house, find out what matters, what has sentimental value, and what helps to reduce the emotional conflicts. Get records in order for someone to follow behind you, and have your funeral wishes documented. Okay? I think we're going to stop there. Any questions, guys? Appreciate your thoughts, appreciate the questions. If you have any questions, I'm more than happy to try to implement it into this. Jim's asked us to go as long as we need to. I've pushed John off a week because my stuff was only supposed to go 1 week, so we're in 2. I know I'm going to go a 3rd week. So, and I'm happy to go as long as y'all need and want us to, as long as we're having a fruitful discussion. So if you got any questions, holler at me. Thank you again for your comments and discussions.